Well, it was a pretty quiet day on Wall Street. The S&P 500 did fall 0.24%, and that was enough for us to push back towards a bearish posture on the S&P 500. But there wasn't as many news stories floating around today, at least from a geopolitical perspective, compared to what we've been seeing recently. We did have some interesting corporate news in Peloton went public. We also saw McDonald's and Beyond Meat teaming up with a new product up in Canada. And then we saw Carnival Cruise shares fall off of their earnings announcement. So a few corporate news stories, but just not a whole lot from a geopolitical perspective. So we'll take a look at that and see what it means for our posture. We'll then take a look at a trade application example from an area that's really been perking up here recently. We've taken a few trades on it in my other trading room classes, but wanted to focus on it here during this particular presentation as well. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's September 26th, 2019. First of all, if you're new, welcome aboard. Remember to go to YouTube, click subscribe on our channel, then also check out our description area and sign up for our email distribution list. We're also heavy users of Twitter. Make sure you're following me at Brandon Van Zee. And lastly, we have a presence on Facebook. Feel free to join our group at the web address embedded in the logo in front of you. All right, let's go ahead and jump into the charts here now. As you can see, I've got chart 4B pulled up here in front of us. And this will give us a good sense of what's been going on with the four major U.S. market indices. And something interesting did happen today in the form of posture changes. And so just to make sure that we're on record with it, the S&P 500 and the Dow Jones Industrial Average both went to a weakly bearish posture. Remember, it's not a strongly bearish posture. That's kind of the difference between the two different shades of pink on the background of the chart. So back here, as an example, that would be considered strongly bearish with that darker shade of pink. This is a lighter shade of pink, so it's just weakly bearish at this point. But nonetheless, those two kind of more blue chip indices did join the NASDAQ Composite and the Russell 2000, which have had bearish postures here for the last couple of days. Now, before we get too worked up about that, keep in mind that I don't necessarily mind this price action that we've been dealing with here today. As you can see, the S&P 500 actually had a nice kind of hammer-looking type of a candle here today, somewhat similar to what we saw yesterday in the fact that we had long lower shadows there. And while it wasn't quite as dramatic over on the Dow Jones, you kind of get the same sense with those long lower shadows. Remember, those long lower shadows can be helpful for those that want to be bullish on the market because it's giving you a sense that the bulls aren't just simply rolling over and playing dead. They're fighting back. Yes, the markets may be selling off just a little bit here and there, but they're not closing on the lows of the session. The bulls actually have a little bit of life to them, and they're pushing the markets up before the market close. So it's a promising sign. I would also say that it's positive that we have all of our moving averages tilted higher at this point as well. So note that the moving averages are all still colored green at this point, letting us know that price is above a rising moving average. And so, the path of least resistance is slightly higher, although I must admit that the pathway that we've seemed to have established over the last year or so seems a little bit more sideways than anything. We don't have a clear established trend either up or down, but at least if you're using the last 30 days worth of information that goes into that moving average there, you do have a slight upward bias there from that perspective. So we're kind of, we got a couple different things vying against one another, somewhat bullish, somewhat bearish. We remain kind of agnostic, quite frankly, on whether we have a lot of bullish trades or a lot of bearish trades at this point, because we're kind of in the middle of the range of where we've been trading here over the last few weeks. So I don't really see this as a strong directional market right now, and we're all just kind of waiting patiently for either a big breakout to the upside or a big breakout to the downside. And until then, we're just going to have to do the best we can by looking for interesting areas within the market that might have a little bit more of a directional nature. So just to put a bow on it, the S&P 500 did close lower by 0.24% today, but it was a quiet day, as I mentioned in the intro. Notice that all of those final labels in the charts there are all blue as opposed to orange, letting us know that today's range was much smaller than the average true range. And so, again, quite a quiet day, all things considered, on the stock market. Let's go ahead and take a look at another chart setup. Let's do the 3 green arrows chart setup now. And here, we don't really have a whole lot to report. When I was with you on Tuesday, I mentioned that the NASDAQ had gone to 3 red arrows, but you can see as soon as yesterday, it went right back to kind of mixed green and red arrows because we got a green arrow back on the moving average. And that's where we stand right now. Remember, on this chart setup 4D, which remember, this is a new chart setup as of last Friday. In fact, in our question and answer session today, at the beginning of our question and answer session, I helped explain a new feature of our dividend stair-step charts that have been updated even since this last Monday. So if you were some of those folks that did the chart uploads immediately last weekend, be aware that I've already made a couple of updates just on chart 2A and 2B. A really cool feature, actually, if I show you really quick here. It allows you to have kind of more of a colored shading system when it comes to selecting your dividend stocks, where you kind of have more of your buy zones and your sell zones there. So anyway, just wanted to quickly point that out because I wasn't anticipating changing the charts quite as quickly, but got my hands on some new script that made it a little bit more appealing. So anyway, if you went up through those uploads last weekend, those of you that are yearly premium members of Market Scholars, at least on chart 2A and 2B, you'll want to see the latest chart script that is on our main tutorial document on our resources area of our blog at marketscholars.com. So anyway, on this particular chart with the 3 green arrows, you'll notice that we have a light colored background or a white colored background on all 4 of our charts here right now, and that basically identifies a situation like I mentioned just a moment ago, which is kind of listless. We don't really have a whole lot of directional nature to this market right now. It's mostly sideways, and that's why we have a mix of green and red arrows. So these are not ideal trend trading conditions when you have mixes of arrows like we have right now. So we're waiting for a little bit more of a directional breakout here with these charts as well. Let's go ahead and take a look at our 1040 crossover chart. Now remember, this is Thursday, so we have one more day before these charts are official as far as this week's candle, so anything can happen. But as of this moment in time, the Russell 2000 remains with a bearish crossover. We've been talking about this for the last couple of weeks, quite frankly, that we're so close to going to a bullish crossover there yet again, where the orange 10-week moving average goes up and above the blue 40-week moving average. But as of this moment in time, we still don't have that condition. We'll see if we can get there perhaps as early as next week if the markets have at least a reasonably decent week. But right now, we're kind of sitting right there on the crossover zone as it stands right now. The other charts continue to be bullish as they have been for the last several months, so not a whole lot to report that's new from that front. Let's talk about the factors here for a quick second. Let's go over here to our Factor 6 grid. This is chart 3D. Just to kind of get a sense of what's been going on from a factor perspective out there. One of the things that we discussed yesterday in my strategy lab class that's posted for those of you that are premium members if you want to go and watch it is that there has been a separation between low volatility and momentum factors. For most of 2019, those two factors were joined at the hip. They either went up together or down together. Quite frankly, they were mostly going up together. But in the most recent about week or week and a half, we've seen a separation of those two. Clearly, it's the low volatility that is separating itself more positively to the upside, whereas momentum is still, kind of misfiring down here. In fact, you can see it clear as day with the fact that the candles are below the moving average on the momentum factor, whereas they are above the moving average on the low volatility factor. In fact, a nice little bounce move on low volatility factor here today, where we now have a bullish near-term posture for low volatility. And of course, low volatility stocks are, stocks like utilities and REITs. One of the stocks we looked at briefly in my question and answer session today was Southern Company as an example. So there's Southern Company's chart going straight up. We also briefly discussed Procter & Gamble. There's Procter & Gamble's chart going straight up. So a lot of these boring companies that, they're considered lumbering giants and, not a whole lot of excitement in terms of product innovation or anything like that. They're just kind of quietly going about their business behind the scenes. A lot of it is dictated by some of the interest rate sensitivity of these groups, but nonetheless, just wanted to point out that low volatility seems to be coming back to life again, whereas momentum factor continues to kind of languish there, and that had not been the case earlier in 2019. Let's take a look at another chart now. How about we go on over here to the asset classes 12 grid. This will be chart 5A. And as you can see, we've got quite a few charts here that have that darker green shade. And remember, the darker green shade now means, with the new chart update, a strongly bullish posture, not just a weakly bullish posture, but a strongly bullish posture. So as an example, I would say one of the better looking charts on the board at this moment in time is the US dollar. We've had back-to-back days of really robust gains in the US dollar, and we now hit a new 3-month high there, of course, having traveled above a rising moving average there as well. And you'll notice that the intermediate reading is at 79.94. Remember, once it gets above 80, that's in the upper reversal zone on the market forecast technical indicator, and it would be considered strongly bullish above there, whether it's rising or falling, as long as it's above 80. Right now it's rising, and it's about ready to enter the upper reversal zone. So the US dollar has been really strong. We also have seen some robust gains out of real estate. Notice that VNQ in this particular case had a nice back-to-back bounce higher here off of that moving average the last couple of days. Now, part of the reason behind that is you'll notice down below here the TNX fell here today. The TNX was down and finished at 1.68% is where we stand on the 10-year U.S. Treasury yield. So remember, when yields go lower, all else being equal, REITs and bonds and other fixed income types of securities tend to do better on a relative basis there. So that's kind of where we stand from an asset classes perspective. Let's take a look at another set of 12 grids now. How about we come on over here to the U.S. sectors 12 grid. And as you can see, we've got two green charts on the board. They both happen to be very boring, non-cyclical types of areas of the market. We've got the consumer staples and we've got the utilities, areas of the market that don't tend to get too roughed up, even if we're in a bad economic environment. Now, that's not where we're at right now, but nonetheless, that's fresh on my mind because we had that conversation today in my question and answer class, as well as one of my students was asking me about some of the automobile stocks and how cyclical they are, and some of the concerns that you might have with those in a recession, particularly around their dividend policy, and discussing how consumer staples companies and utilities companies usually are able to maintain their dividend policies even during rough economic periods because they generally are kind of needs of society rather than wants. But anyway, that's kind of where the market is heading right now with those more defensive areas of the market. I would also add that the real estate space is doing quite nicely as well. Yes, you do have a pink background there, letting us know that we have a weekly bearish posture. But again, similar to VNQ, in this case it's XLRE. Notice the nice bounce off that rising moving average for XLRE here. So I think real estate has a really good chance of perking right back up again, just like we've seen countless times in 2019. So this continues to be a market that's being led higher by more of your defensive areas. And remember, over here on my sector selector, now this is a bit stale at this point because this was as of last Friday. Remember, tomorrow night I'll be doing a brand new version of it, so keep your eyes peeled there. But already last Friday we had seen a nice bump higher in the utilities to the #1 slot, and real estate went from #4 up to #2. And staples did kind of go sideways here, but my guess would be, just seeing some of the nuances of the market this week, that when I redo the sector selector tomorrow night, my guess is going to be that the staples perk up a little bit, maybe 1 or 2 slots, depending upon how some of the technical analysis shines through in that ranking system there. But point is, those are the areas that have led the market in recent time, especially utilities and REITs, and they're the area that continues to get bought on any pullbacks, it seems, that we've had here in recent weeks as well. While we're over on the internet, quick thank you to everybody who did click like for me last time. Boy, you guys came out in droves, and I certainly appreciate that. No questioning your loyalty at this point. I mentioned the last time I only got about 83 likes, and I said it's time for you guys to step up to the plate, and you sure did. 122 of you did. So anytime we get that number above 100, I'm happy. Please keep that up. It lets us know that you guys want us to do these on a daily daily basis. It's your way to vote. It's your way to let David and I know that you appreciate them and you want to keep them coming. So thank you. Please do that again tonight for myself, and then also tomorrow for David when he does the video as well. And as I mentioned before, I did my question and answer session earlier today. That is now posted. David had his portfolio management class earlier today, so be on the lookout for that hitting the calendar as well. And then tomorrow, David's got his very popular technical analysis class, and so all of you that are premium members are invited to join that, of course, as well. And even those of you that might be just checking us out on the free trial, remember that's one of the classes that's available on that 30-day free trial as well. All right, back on track to the charts now. Let's do a little bit more 12 grid analysis here. In this case, let me pop on over to some of the foreign stocks. I wanted to check out global stocks primary 12 grid here, which is going to be chart 5E. And here you can see it's a little bit more of a mixed bag. A lot of times when we look at the foreign markets, they're all kind of mostly going in the same direction. But right now it's really kind of a split decision. You got a couple of areas that are really quite interesting. In particular, you've got Japan that seems to be really breaking out to the upside here. So EWJ, keep your eye on that one. We're actually up near the 94th percentile on the intermediate line on the market forecast. So there could be some opportunities, not just with EWJ, but perhaps with some of those ADRs that are traded in the United States as well. So keep your eye on that particular area of the market. In terms of what's not really working, you know, there's not really any really terrible looking charts on the board. It does look like China is kind of falling at a greater pace than the others. You'll notice that the intermediate line on China is at 59 and falling, and you can see this has been a really strong pullback right here with FXI. Now remember, FXI is going to be covering your large cap securities over there, and many of them trade in Hong Kong as well. So it's not quite as clear cut to say, well, this is China's domestic market here, but it is still a good proxy for what's kind of going on over there. And we have had quite the dramatic fall in share prices there. However, the good news is we're resting right on that moving average as it stands right now. So if there were ever a place where it would make sense for FXI to start bouncing, this could be the place right here, right now. So we'll see as soon as tomorrow whether they can, maybe get a little bit of a Hail Mary to throw right there at the moving average. Let's go ahead and take a look at our secondary 12 grid of global stocks now. This is chart 5G. And from this 12 grids perspective, I would say that the stronger looking charts are probably Turkey and Taiwan. Both of those are up there near their 3-month highs. Neither one of them look like a great trend. Particularly Turkey kind of seems like it's just meandering more than anything. But I guess Taiwan has a little bit more of that upward tilt to the moving average there. So perhaps something to get a little bit more excited about with Taiwan. But they're not really the smooth, consistent, higher highs and higher lows types of the charts that we typically would be looking for. So I'm not getting overly excited about much that I see right there. On the negative side, of course, Argentina continues to be in the house of pain like it has been for much of the last 2 months, ever since having one of the most disastrous days for one country in the history of the world. Literally, it's one of the 5 worst days for an entire country index for like the last, I want to say, 50 or 60 years or something like that. So that was a horrific day there for Argentinian stocks, and it's continued to languish ever since then. All right, real quick, I wanted to also take a look at our ratio charts. So let's take a look at 5Q here. There it goes. And kind of get a sense of, where we're starting to see some themes being established, if any. And as we're looking at this here, I would say that I'm not really seeing big themes. It kind of seems like we're moving in big ebbs and flows, but there's nothing really taking hold from a trend perspective as it stands right now. What we did see a couple of weeks ago was a pretty violent move with this chart in the lower left-hand corner that you'll want to be aware of. And that was a massive rotation out of growth stocks and into value stocks. And that occurs when we had this big drop that took place right here from a ratio chart perspective. You can see that growth stocks have gained back a little bit since that move, but keep in mind that there's been, probably about 2 weeks here worth of candles, and we're still trying to battle back not just this candle, the big, terrible day where there was that massive rotation, but even the follow-up day right there. where it stands right now, we're still within that particular candle right there. So while growth stocks maybe have gotten back a little bit of that ratio loss there, it hasn't been very dramatic. And it doesn't really look like they're willing to take the growth stocks higher the way that they once were earlier this summer. I kind of talked about that on Tuesday as well, but a lot of those cloud computing stocks and a lot of those software as a service stocks and everything that people got excited about from an IPO perspective, right? I talked about Peloton went public here today, and that thing fell flat on its face. It was down, I think, like 11% or something like that when it was all said and done. So, it doesn't seem like there's this desire for speculative growth types of stocks that are revenue only stories currently. It does seem like it's a market that is more interested in an actual earnings story where you can hunker down in legitimate profits and not just an expectation of profits one day down the road, in 3 years or something along those lines. It seemed like the market was a lot more forgiving earlier this year. Right now, it does seem like it's kind of a prove it to me type of a market. And in the meantime, they're going to go to things like the utilities that have consistent profits, even if they have to pay up a little bit for them. All right, that brings us now to our trade application example for the day. And for that, I wanted to come on over here to chart 3A. And this is our swing trading chart here. I'm going to bring up ticker symbol XHB. Now, we've actually taken a couple of bullish trades in the home builders here in my various trading rooms. We took one home builder trade that's continued to hit new all-time highs, or at least new yearly highs in my top-down trend trading class a couple of weeks ago. And then last week, we took another swing trade on one of the other big home building companies as well. So it seems to be a theme that's somewhat more legitimate. It's starting to perk up on radar screens all across the board, whether you're looking at trend trades or swing trades or what have you. There is bullishness going into the housing market right now, or at least that's from my perspective. This here is not one of the individual stocks like we were trading in my classes. This XHB happens to be an ETF that tracks the home builders. So home builder ETF here, XHB. As you can see, we had a nice little run out of kind of a consolidation area here at the beginning of September, and then we started pulling back a little bit, and now it looks like we're rounding the corner, and we want to kind of take a push higher here in the home builders. We'll just have to see if that holds or not, but right now I do like what I see from that perspective. You'll notice down below on the market forecast, now this is one of the market forecast views that emphasizes the near-term line as opposed to the green intermediate line like on our other charts. So this is more of a swing trader's view that we're looking at here, but I did want to point out that it appears that we have a bit of a bullish divergence that's taking place on the near-term line itself. So note that we had trough number 1 right here, kind of where I'm circling with my pencil, and then trough number 2 where I'm circling with my pencil right here. That's a little bit higher. Note that this one came right down to that low reversal zone and then bounced out of it. This one didn't go all the way down to the low reversal zone. There's a little bit of air between the two and then bounce. So in other words, there is a higher low that took place there on the near-term line on the market forecast. Now, the candles that were associated with those two moments were this candle right here that I'm pointing at, and this candle right here that I'm pointing at. So in other words, price fell from here to here. The indicator went up from here to here. That is a near-term bullish divergence there. You can also see that nice kind of W pattern making its way through that blue near-term line down below there. So I think there's enough positivity around the theme of home building to perhaps take a bullish trade here, as it seems to be one of the areas of the market that seems to be working a little bit better than the others. Now, this one does have options that are available on it, but I think in this case I'm just going to keep it simple today and just do a regular stock-based kind of swing trade on it. And what I'm going to do is I'm going to use this candle as our bogey to figure out where I want to set my stop loss. Usually I just go a couple of pennies below the low. And so the low price on this particular day was 42.81. So we'll put our stop loss at 42.79. The other thing I should have mentioned is you'll notice that over here, I guess it was in July, we had this big move higher, and then we kind of used that as a resistance area, and it fell back lower. Now, there is a theory in technical analysis that old resistance can become new support, and it does kind of look like that's playing out to a degree here as well, because if you look at kind of the top of that candle there, and then you stare at my crosshairs all the way to the right, notice where it bounced. The crosshairs are going directly through this candle right here. So if that theory holds true, old resistance is becoming new support. Hopefully we get a little bit of a push off of these levels here as well. So anyway, I'm going to put our stop loss 2 pennies below the low of that particular candle there. And that means if I want to kind of maintain a 1-for-1 reward risk relationship, there's about an 86-cent difference from where we closed today to where our stop loss would be, right? If you get your calculator out here and you take the current price of 43.65 right up there and subtract out where we're going to put our stop loss at, it was 42.79. That means we have an 86-cent difference as far as how much risk per share we're taking. So if I take that 86 cents and add it back to the current price of 43.65, it means that my upside price target will be 44.51, which will be right up in this general vicinity right here. And so it does require us to get up and through that candle here a couple of weeks ago, but as long as we've got enough momentum there, it shouldn't be impossible to achieve. So we'll go ahead and give that a shot here. So I'm going to right click on the chart. I'm going to go to Buy Custom with OCO Bracket. I'm just going to leave this in here as 100 shares across the board, since you're welcome to position size in your paper money account for whatever you feel is best. But for us, we're just doing this for educational purposes. So I will just leave it in there, trying to buy it maybe 1 penny here above yesterday's or today's closing price. And then I will go ahead and on the next line down, that's where I'm going to put in my upside price target of $44.51. That will be good till cancel rather than good just for the day. So I change that there in the drop down. I'm going to change it on the one directly below that as well. That refers to the stop price. So both of those are listed as good till cancel. And then the stop price itself will be, it was 42.79. So that's a one cancels one order that I just showed you right there. In other words, if we are filled on the buy part of the trade tomorrow, then one of these two things will hit. Either the stock will go up to our price target, lock in gains. If that happens, then the stop loss gets canceled. Otherwise, if this rolls over and goes down and stops us out at 42.79, then it will go ahead and automatically cancel our upside sell at our price target. Okay, so I'm going to go ahead and click confirm and send, and we'll go ahead and ship that off. Perfect. All right, well, thank you for joining me here today. A little bit of a pullback in the market today, nothing to get overly concerned about since we're still trading above rising moving averages, but we did have a bearish posture change there when it comes to the S&P 500 and the Dow Jones that you'll want to be aware of here today. So tomorrow, David should be with you for this particular video. I'll get my sector selector rankings out for those of you that follow that, and I'll look forward to seeing you all next week. Take care, everybody. Bye-bye.